this is at Magic Kev on Twitter. And I talked to him while I was at FX Street. I don't remember the interview, but he said he played it. And looking forward to Kevin showing us his magic. So, Kevin, you are now the presenter. Waiting to hear your voice. Hi, buddy.
How's it going, buddy? How are you?
Oh, great to hear your voice, and thank you so much for your understanding. Yesterday, CNBC anchors have bookers, so I do my own booking, and I double booked and had Cody yesterday, so I'm glad you can make it today. Why don't you refresh my memory, since I just turned 64. What did we talk about? Was it a year ago or so, Kevin? Over on FX Street?
Yeah, that was about 2 years ago. At that point, I was 2 years into trading, and I just recently came across my mentor who took my level of understanding supply and demand to a totally different level of understanding.
Who would that be? Sam Seiden?
No, see, I was taught by Sam Seiden to begin with, and then I found a guy by the name of Alfonso Moreno.
I interviewed him.
Did you?
Yeah, recently.
Yeah.
Okay.
Yeah. That guy is that guy, in my opinion, is a real genius when it comes to supply and demand trading. Okay. And so I've been studying hard his work for the last 2 years, and seen some real.
So this is what, your fourth year now, right?
Yeah, so I'm 4 years into it now.
Well, you should be graduating. That's like an undergraduate degree, 4 years of screen time. So yeah, are you making breakthroughs now?
I am making breakthroughs. I am. But it's like the more I learn, the more I realize what I don't know.
The more you don't know?
Yeah. And so it's a work in progress. I love studying charts. I love working. So, slowly, eventually, things start to unfold.
So I see you're accumulating Aussie Kiwi underneath.
Yes, that's right.
Is that correct?
Can you see this screen here where my mouse is?
Yeah, we're looking at the gold right now. The XAU weekly is the chart.
Oh, okay. Oh, yeah. Right now, I got a long position on Aussie New Zealand.
If you wanted to start with gold, that's okay too. But you're looking at supply demand here.
Mm-hmm. So what I've got on my charts here are areas of supply and demand that the institutions have been using to accumulate or distribute gold.
Okay.
So from what I see,
number, do you?
I'm sorry?
Is 1280 a big number? I know there's a big trend line there in gold.
Well, I think price is going to break up to the upside and break through the 1280, to be honest with you.
Yeah.
There's a nice, because if you take a look here, I'll open up the weekly chart and just show you something.
Looks like you're looking for about 1340.
Yeah, up in these areas, I think we're going to get a reaction. Because if you look at the monthly chart is the most clear chart. And so we're bouncing off a 3-month demand zone. All right. And so when price bounces off a 3-month demand zone, the sky's the limit. And if you take a look at a monthly, there's really nothing to stop price from heading even higher. So we've got this area that I've marked off as supply, but this is not the greatest looking area of supply. It will be respected because it did remove an area of demand. So whenever an area of supply removes an area of demand, then that area tends to be respected. So I think we're going to head up a little bit higher on gold, and that's going to hit the 1308 area. And then we're going to see a move to the downside, which basically coincides with a move that I'm watching on the US dollar. So if I switch over to the US.
Okay, so you're thinking 1308 and then a big break in gold, or just consolidation?
Yeah, I think 1308, then a small move to the downside. Probably consolidate there for a while, and then eventually break up even higher.
Okay.
But
so I saw on
it's a
your
guessing
monthly
game
chart
right now.
the potential for 1500 on your monthly chart.
Yeah, if this area, bottom line is if this area here breaks, if this 1375 breaks, then there's nothing to stop price from moving all the way up here to the 1500s.
I'm getting a question, are your supply zones, does it come off an MT4 indicator or is it proprietary?
Nope. It's all my hundreds of hours of studying charts and analyzing supply and demand. Yeah.
Okay, so what did you learn from Alfonso that improved your looking left trading techniques?
Well, what I learned is that not every imbalance on a chart is a valid supply and demand zone. So the importance of supply and demand is when you're looking for areas of imbalances, we're always looking for areas that remove previous areas of either supply and demand. Because institutions always have orders to fill supply or to fill in demand. So if the institutions feel that price is going to head higher, then what they have to do is they have to be able to bring in more demand than there is supply at the key level. So if they want to break through supply, then they need to fill in so much demand that it'll cause price to break through that supply. And so when they fill in so much demand that causes opposing supply to be removed, what tends to happen is price tends to pull back to those areas of demand so they can fill in the rest of their orders, and then price continues to shoot up to the upside. So what Alfonso taught me was not only how to find those key levels of supply and demand that are valid, but how to interpret price based on looking at multiple time frames as high as 6 months charts. So we look at 6 months charts, 3 months charts, monthly charts, weekly charts, daily charts, and 4-hour charts.
I remember that in the interview. His stuff was telescopic.
Yeah,
And stuff. Yeah, I remember saying
it's really important.
The monthly and the weekly were the most important to him.
Yeah, very, very important. Because like on gold, if you look at a 3-month chart, for instance, we have an area here that we have considered to be demand. So why is this demand? Well, because price was heading up. It consolidated here. And when price consolidates, institutions can either say, okay, enough of this consolidation, let's either take price higher or lower. And so when there's an explosive move to the upside, like this green candle here and the following candles after it, what tends to happen is when they exhaust the demand and price retraces, it only retraces to areas where that demand was so strong. And it just happens to be this key level here. So as you can see, price came down to this key level, created a nice bullish engulfing candle. Price comes and retests that area, and now we're getting that move to the upside. So by looking at the 3-month chart, it looks like price is just going to be heading even higher from where we are right now.
Great look.
So can I show you something interesting on the US dollar?
Sure.
Yeah. So.
We're always open really and interesting. No, in fact, why don't you show us something very boring?
Well, take a look.
Go ahead.
Take a look at this US dollar. So US dollar hit a 3-month supply zone right here. This little spot right over here. So here's the zone, this line coming over. So price is trending upwards. It's that area right to that line and starts to drop. So what tends to happen, Dale, when you have a 3-month uptrend, which is what I clearly see on this chart, is a 3-month uptrend. Yeah. When we hit an area that we call a CP supply zone, we call it CP. CP stands for continuation pattern.
Okay.
So we have a drop and then consolidation, and then the institutions decided to continue the momentum to the downside at this location. So what tends to happen when you have this type of consolidation is when price hits it, for whatever reason, I don't know why it works, but I do know that it does work. When we get back to those areas, the supply comes back into the market. And so when price drops from a CP area of supply, what tends to happen more times than not is when we drop down one time frame, we find a demand zone, which is what we're about to hit right here on the monthly chart. And price will react to that demand zone, consolidate for a while, and then eventually move to the upside and eventually take out that 3-month CP supply zone.
Okay, so that's interesting. So your work is saying we're getting close to a low, and then you would anticipate 104 or whatever it was, 103.80 being taken out to the upside.
Yeah, I anticipate that within this 95 to 94 area, we're going to get some accumulation, and then I'll be watching
Dale, Can I ask a question to Kevin?
Sure,
please?
Go ahead. Kev,
Okay,
this is my partner in crime, Steve Volke.
Yeah,
Hi, Steve.
It's nice to meet you, mate.
Hey, nice meeting you too.
Can I ask you a question? Can you go back
Sure.
to the DXY chart?
Yeah.
It's
The one you were showing before with, what was it?
The
3
monthly.
months. It was a quarterly, I think. Yes.
I think it was a month.
Yeah. Yeah.
No, it was 3 monthly. Yeah, it's this one.
Yeah.
Yeah. So, for example, the zone you characterized there as a supply zone, because we had a consolidation on the way down, is back in 2001. Do I see that right?
Yeah, that's right.
Okay. I'm not doubting that this method works, and I do believe that price has memory for several reasons, and in many occasions, it's exactly what you mentioned. It's the fact that there is a lot of vested interest in the market.
Right.
But since in this occasion we're talking about something that goes back to 2001,
yeah.
Do you believe that there were institutions, for example, call them banks or call them whatever you want, that committed to a position back then that they're still holding 16 years later?
No, I don't. But you know what I believe? I believe the thousands of hours I've spent on Forex Trader, on Forex Tester, and all the forward testing that I've done has proven to me that regardless of how many years back a supply zone goes back, for some reason, those zones get respected.
Oh, no. I agree with you. I've seen that many times.
Okay, so,
so
the market is like an elephant. It has a very long memory.
Yes.
Yeah, I don't know how it works, Dale, to be honest with you.
You're absolutely right. You're absolutely right. I do think that price charts, have a sense of memory, but I doubt that in these kind of occasions that we go so much back, it has to do with the initial positioning we had back then. That's my only.
No, I don't think it's because of initial positionings that they had in 2001. It's probably that the institutions are basing their decisions on what they've decided in the past. I think that's probably my best guess, but I couldn't tell you exactly because I don't know. But what
because
I do know is that
they look left too. It doesn't mean that they have a position on.
Yeah, probably, or maybe it's through algorithms that are programmed to respond to previous areas. I don't know, but all I know is it works. I mean, like you look at this line here, and you see that reaction. The supply came into the market at that exact same spot. I'm not quite sure why, but
with you on that.
That's crazy. It just works. All I know is I bless the supply and demand gods for the fact that it does work. Because if it didn't work, I wouldn't be able to trade these markets.
Well, it sounds like, let me ask you this, Kev. You brought up a great point.
Yeah.
You back tested, you forward tested. You probably put in many hours before you went real time or changed your method. Give us a ballpark of how much time you spent back testing this methodology before you put it into action.
I worked until I got carpal tunnel in my hand.
Okay, well that's long enough. All right, so anyway, that's a point to our community that if you're trying a new method, that back testing is crucial. A lot of time has to be spent before you put live money on the line, and that's why you have confidence in your work and your models, is because of all the time you put into it. It wasn't just, I saw a video on supply demand, Sam Seiden on FX Like I said, a lot of people say, I will teach you the secret to trading, and you just told people what the secret of trading is. It's hard work and persistence and a lot of hours. So, congratulations on your persistence.
Oh, yeah. Thank you. I appreciate that. Yeah. So, it was a lot of hours. And it was.
And that's all you do is, you're just trading for yourself. You don't have do you have a business model where you're teaching people or?
No, I don't teach people. I just trade my own account.
Okay. You keep it simple.
Keep it simple.
Okay.
Yeah. I post some stuff on Twitter.
This is not an avocation. This is how you support yourself and your family.
Yeah, I make my living through trading.
All right. Okay, so there you go, guys. Everyone hears that 90% fail and lose 90% of their money in 90 days. And let me ask you this, with your handle Magic Kev, in your first year of trading, were you able to make money disappear?
Oh, yeah, very quickly.
Okay, so that was abracadabra. My account is gone. And now you've been at it 4 years and it's working for you.
Yeah, it wasn't until I realized that, like you were just mentioning, they say 95% of traders fail. And one day I listened to an interview, and this guy said it very clearly. And he was a very successful trader, still is. And he said, listen, when I heard that expression, 95% of traders fail, the only thing I thought about was, well, if I just do what the 5% do, then I'm pretty much guaranteed to be successful. So I just focused on what the 5% did. And my mentor is extremely successful. And what did he do? He spent thousands of hours for testing his rules and learning all the nuances that made him successful. And I just did the same thing, and slowly the results started to come through.
And if my memory serves me correctly, Alfonso does not sit in front of his platform all day long. He's
he doesn't have
set
to
and
do that
forget
now.
guy, isn't he?
No, he doesn't have to do that now because he's done the work. Yeah, so he just spends half an hour to an hour in the morning setting up his trades, and then he goes off with his day.
How about you?
Me, I'm still working at it because I have a vision of where I'd like to see my trading, and it's going to require a lot more work from my end to get there. So I'm still chugging away.
Okay, Kev, any other markets you want to show us an example of your work, or is that it?
We could take a look at the euro. A lot of people have been speculating on what's going to be happening with the euro. Okay. The euro is in a monthly supply zone right now. So just like the U.S. dollar has been dropping and dropping and dropping, and we're just about to hit a monthly demand zone, the euro is actually sitting inside a monthly supply zone. But here's the key thing here. If you take a look at a 3-month chart on the euro, we just fell short of hitting a 3-month demand zone, and we are reacting to the upside. And as we reacted to the upside, if you take a look at a monthly chart, we have a really nice trend line here that's been broken by this area of demand. Right. So if price decides to break up through this area of monthly supply, which it could very easily do because this isn't the greatest area of supply, if price breaks up past this 114 spot, I can tell you one thing, is that what's going to end up happening is price is going to come down to this area of demand, and then price is going to be shooting up even higher.
Okay, so if we break through the first supply zone, you would expect institutions to take it down so they could buy it cheaper before they run it up again.
Yeah, exactly. Because this area here of demand, you see, the institutions or their algorithms or whatever they're doing, they're watching.
They didn't have enough time to accumulate. They didn't have enough time to accumulate at that demand.
Yeah, they didn't have enough time. And so when there's a trend line, they have to break that trend line, right? Because everybody's trading with that trend line, so everybody's shorting when price hits those trend lines. So they have to bring in enough demand into the market to not only break that trend line, but if this supply zone breaks, that means they have to bring in enough demand to break a trend line and to break a supply zone. So that's a lot of demand. And what will probably happen
is they've used a lot of their energy up. They're using a lot of their energy up here.
Exactly. And then it's going to exhaust. When everybody else buys and buys and buys and there's no more buyers, it's going to exhaust. It's going to head back down, and they'll reaccumulate. And that's only if this area breaks. If this area doesn't break, then price is just going to fall back down and start absorbing this demand, and it can just easily break down further to the downside.
Okay. What a great interview, Kev. I'm glad I reached out to you again. I want to congratulate you on your stick-to-itiveness. That's what Jake Bernstein said is the main ingredient for someone to make it in this game. It's persistence, stick-to-itiveness, and wow, the progress you've made, and what a small world. Your mentor is someone I interviewed a few weeks ago, and thanks for your support on Twitter, and I'm proud of you, buddy.
Thanks, man. I really appreciate that. Well, I appreciate you reaching out and chatting with me again. It was really nice to hear from you.
Yeah, and once you really start cooking, if you ever want to adopt an uncle, I'm available. And thanks for only sharing interesting looks instead of boring looks. And you know what, my trading warrior brother, I hope pips rain down on you the rest of your trading career, and you may want to think about paying it forward. And you see some lost souls on Twitter that need a hand, help them out. And
I always do.
All right, buddy, and congratulations.
Nice meeting you, Kevin.
Yeah, nice meeting you too, guys. All the best, all right?
Yeah, thanks for coming in today. You made the NFP day very special. So
thanks.
Again, I'm proud to call you my trading warrior brother, Magic Kev. You can follow Kevin on Twitter at Magic Kev, and it's Magic MAGIKEV. Everyone thank Kev. Some interesting looks. Brilliant analysis from Arif and Algo. Everyone enjoyed you, buddy.
Thank you. Have a great weekend, guys.
Very much.
All right, take care.
Dale, USD yen is now toying with 110.50 that we were talking about, earlier.
Yeah.
So this is,
and the S&Ps are lower. Are they lower now?
So this is the do or die level. For USD yen, obviously a break below it should find some acceleration due to stop losses or whatever. I mean, it's bound to have stop losses there. So people should really be careful of this level. If you're long, be very careful. If you see a break below here, things are not looking good.
We're talking about the charts, buddy.
Oh, sorry, I didn't see that.
Okay.
Also, let me remind here that Nasdaq reached our target at 5,840 to the pip. So, I really think that this is a good level for another attempt. I already took, a punch here, and we'll see. I mean, I took a stab here in being short, and we'll see. I'm going to keep my stop loss above the channel. Don't follow in. It's quite dangerous. Previous time I managed to exit with break even, but you know how it is. It's quite dangerous. But I like it. I like the structure. I like that it's very clean from a technical perspective and from an elite wave perspective. So I'm giving it a go. It's the start of the month. It's NFPs, so why not? We've had 11 days in a row that we haven't seen a drop since that Wednesday. So I like it quite a lot. We were seeing also a rebound in oil from a very important level. And actually, let me show you this. Greg, if you saw, also put this very nice chart. I'm bringing it here. Oh, sorry.
Yeah.
Wrong.
Yeah.
This is the Euro USD. He's looking at the Trump high, by the way, and there was a friend asking about it. So for whoever is asking, yes, this is a very important level to watch. And Greg, I also posted a while ago about oil, that 47 is a critical level for him. And I totally agree, because it's also the 61.8. So the thesis that this move lower might be, terminal, and we might see a reversal, is based on the fact that we might hold this zone. So it's very critical to see. If you see a serious rebound from here, Gregor was saying before that he thinks that this is going to lead to a leg higher. I'm deleting now this, because we actually had this move to the pip. I mean, we rebounded as much as I roughly expected here, and we went back down, equally as much, but not as slowly. We had a very sudden move. So now the question is, what happens from here? And what happens from here is, I see two possible scenarios. One of them is this. Okay. One of them is this. Okay. And the other one is just straight up as Grega thinks it's likely. You know, I don't like to fade Grega. I can tell you that, you know, I believed in being short after a rebound here. We had talked about it. We were in Cyprus. I don't believe that there is a place to be short here now. But if we see a failure of a retest of the 49 zone, then that's going to tell me, because I still have no strong bias in oil. Oil has been very choppy. It has made a lot of fake moves. It has caught people off guard and caught people, you know, getting people positioning in the opposite way than it's moving afterwards. So, you know, I have no real medium-term bias for oil at the moment. But if I see 49 fail, I'm going to be looking for another move lower for sure. So, you know, this is what I'm watching currently for oil.
Okay, buddy.
Yeah, that's it. USD still pushing the highs.
Yeah.
You know, that's it roughly. So you want to call it a week?
Yeah, let's call it a week, and let's call it a great week. How about that?
It was.
So,
totally.
I want to thank Kevin for coming in today. Impromptu, great interview. I want to remind everyone, if you're an aspiring trader, be here Monday to hear Jack Schwager, because Jack has a business called Fund Seeder, and if you have a good track record, Jack may be able to fund you. So I'm going to be talking about Jack Schwager, author of Market Wizard's new book. I have it right here. It's called A Complete Guide to the Futures Market, second edition, by Jack Schwager and Mark Etzkorn. So Jack will be here Monday. Have a great lineup next week. I want to thank all the guys and gals in the F.A.C.E community. Armand's got something. Let's see what you have, Armand. Euro USD. Okay, I want to take a look at what Armand has before we say goodbye. I respect Armand's work a lot. I want to thank the team. I mean, what a team. And how much fun it is to interact and collaborate with everyone in here. So, let's see if I could show Armand's. So, thank you, Steve.
Thank you for having us, mate.
You know, I don't have you. You guys have me. In fact, the unemployment rate, the jobs number would have been worse if you guys hadn't have retained me a couple months ago. So, you know, I don't know. It didn't come up, Armand. Let me try it one more time. I want to thank Blake, and I want to thank Nick and Grega and Stelios and everybody. I think we have the best team on the net. And I've been around for a while, so some people may say I'm not being objective because I'm part of it, but I'd be objective. And in fact, I challenge anyone out there to find a better group of traders in one room. Okay, so here's Armand's a very good trader. Here's his look. So he's looking for a little pullback here, a little deeper than I thought, back down towards 109 before we get a big rally. So nice look, Armand. Armand keyed me onto the pound Aussie short at the top. So don't fade Armand. This is just another example that, you know, even though guys like Blake and Greg are master traders, and Steve and Nick are great traders, and, you know, I'm an average trader. We have great traders in our community. Armand happens to be one of them. I've been watching his work for a while, so take a picture of this one. And also, that's right, remember, rubber pants, and I know why you wear those. Don't just count your pips, count your blessings. And everyone have a great weekend. We're going to have a great June. We're starting off June, our third month in F.A.C.E. Thank you for supporting it. And what the heck? Sign up and take a subscription. I know the guys don't like me to be a salesman, but you know what? You don't get if you don't ask. So the squeaky wheel gets the grease. So sign up, and then you have all weekend to go over the different views going into next week, and you'll be prepared not just to squeaky door, no, squeaky wheel gets the grease. You'll be all prepared for some exciting markets next week. So with that being said, everyone have a great weekend. See you team, see you face. Adios. Thank you, Kevin, for your interview. Be ready for Jack Schwager next week, Peter Bookvar, Adam Button. Pretty good lineup. You're going to get, again, another week of great content. That I can't guarantee profits, but I can guarantee the greatest content on the net. And I do guarantee that we'll have another week of that. You're very welcome, Glenn. See you, Noob. See you, Glenn.